Gonna get the talk thingy over here. There we go. How you doing, friends? It is Monday, the start of a new week. Monday, June 29th. Soon, I say, July 4th, Independence Day will be upon us. A wonderful holiday, one that may mean or take on very special meaning this year. Are we going to gain our independence or are we going to give it up? Are we going to become free people? Or are we going to give the rest of our lives to the state? Are you going to be a traitor? That was trader and not traitor. And give up to this market volatility? Or are you going to play it smartly with understanding of how to take advantage of these turbulent times? So, it's one thing to play with leverage, Forex, Bitcoin, and even some stocks that are in volatile markets. Of course, everything's volatile these days. And it's a confusing market because we don't know if we're going to go up or down. It seems like we should be going up, or we will be going up, but it seems like we should be going down. And I know that most of you are trying to guess, and those guesses are often wrong. You don't have to be right to win a trading. So, what? Ernie? What say you? You don't have to be right to win a trading. Well, that's the wonderful thing about volatile markets. They present us with some unique opportunities. They present to us a market that could go way up or way down or both. And there's no way to tell which. Now, wouldn't it be great if during that kind of market, you didn't have to pick sides? You didn't have to choose whether it's going to be a bear or a bull market or a bull trap or a bear trap or any of the other conglomerations you can think of that are out there to fuck you over. You just put a trade on and it doesn't matter which way the market goes. It doesn't matter if it goes up, goes down, or even stays the same. You can do that. Itchy nose. That means I'm going to have a fight. You can do that. You can create a strategy. You can play a strategy that works whether the market goes up or goes down or stays the same. Now, of course, there are limits to that. If it goes up way too much or it goes up way too little or stays exactly where it is, you can adjust for all of those different types of scenarios. You can choose wide ranges of prices and say, hey, as long as it stays within here in the next couple of months, I'm good. Or you could say, I think the market's going to go up to this point and just hang out there. And you could pin the tail on the donkey and make a crap load of money with a very inexpensive bet. And that's really what it comes down to, being able to put on these bets where there's very, very little risk. Of course, there's always risk. There's the risk that you could lose. And maybe these bets will lose more often than not, but when they hit, it depends on the bet, of course, they hit big. Or they hit no matter which way the market goes, and maybe they don't make a huge amount, but they hardly ever lose. You could construct All of these scenarios, all of them with options. So this this is a what I'm going to propose here is a natural outgrowth of the asymmetric advisor. And if you've been watching, the asymmetric advisor is an advisory service that I started a few months back, and we focus on the resource market, commodities, miners, um, energy, anything that has to do with resources, even cannabis. And the reason for that is that they have an abundance of asymmetric opportunities. In other words, an abundance of these sort of boom and bust cycles within these markets. Like right now, commodities are getting set up for a huge boom market in the coming years. I mean, years. So you could put on bets here, very little risk. Just bide your time, make a crap load of money just by sitting around and doing nothing. Right now, with this pandemic, it is setting up a new, what I call new volatility regime. It was in the past, and I talked about this just last week. It was just recently in the past that we were in a a microscopic volatility regime where volatility for a long, long time was like sub 12, 11, 10, even 9. Crazy low. And that meant for price variations and that would just sort of creep along and then just bleed you dry. Of course, the secret was just to stay long. Still a very tough market to trade. Some people think, well, little volatility must be easy to trade. You don't get kicked out of your position. Wrong. Without volatility, there is no difference between not profiting and profiting. You need volatility to create that spread between where you get in and get out. Without volatility, there is no profit. Unless you're willing to hang on for the doldrums of a slow, wavering, meandering market and hope that it goes up over a long period of time. With a volatile market, you don't have to worry about that at all. It moves, you profit. This new volatility regime is going to be with us for a long time. I'm guessing minimum 2 years, right? That's enough time to make a crap load of money by taking advantage of things that are just sitting there waiting for you to pick them up. As I had explained in Friday's show, like $100 bills just waiting for you to pick them up. The markets are going to be volatile. They're going to wildly swing up or down. And if you have a bet that makes money, whether it goes up or down, you make money. Almost a virtual guarantee that it's not going to stay the same. But if it does, you can make money there too. Strategies like straddles, strangles, and calendar spreads, double calendars, a whole wide variety of trades that just too numerous to talk about. Now, the problem with options is that most people don't understand them. They don't understand the implications of holding a short position in an option, whether it's a long call or a short put. I'm only using long and short in this context of whether it's bear or bullish, because it means a very, very different thing whether you're long or short an option. A short call, even though a call is a long or a bear or bullish thing, is actually a bearish trade. A short put is also not a bearish trade, it's a bullish trade. But then they come with special considerations. These are things that people need to understand. Now, right below me, you'll see the link, asymmetricadvisor.com/cbundle. I had originally designed, excuse me, designed this new service for people within the Asymmetric Advisor service. But I thought, man, it'd be really cool if other people could take advantage of this. This is not much different than a service that I had offered a long time ago, between the years of 2009 and 2013. I had a business that focused on exactly this type of thing. We predominantly traded Apple and FANG stocks, but we also traded volatility and things like double calendar spreads, double diagonals, that sort of thing. Theta producing, or basically income producing strategies where you didn't have to do a whole lot. You just had to set it up and wait it out, and the money would come in. Easy to adjust. You can't get blown up on these things because the market would literally have to, go to infinity or go to zero. And even then, plenty of time to adjust. So, anyways, I did this service for a long time. It was a very expensive service. Had a lot of people in it. It was something on the order of $395 a month, and people paid it because it was so good. So what I decided to do was take that the essence of that service and the teachings that I did in there on how to properly use options to model your view of the market using a method that I call 3D options, the three dimensions of options: time, volatility, and I guess you could say the bearish or bullishness of the market, the delta of the market. That's what options are all about. They're about modeling your hypothesis for the market. Of course, you have to have a hypothesis. You need to apply this to something. And then that's why I wanted to marry that with resources, because those resources, they have a story along with them. And they are constantly in these boom and bust cycles. In other words, they're moving really fast in different directions. So it seems like the perfect marrying. We can take the market, some high price stocks, some resources, energy, gold, others, and apply these non-directional, income producing, fantastically stable option strategies that don't put you at risk like you are with stocks or with Bitcoin or with Forex. And you can trade them. Like I said, it was eventually meant to be a complimentary service to the Asymmetric Advisor, but I decided to open it up to more people. Made sense. It makes sense because I want more customers too, but it makes sense. So there you go. Make money regardless of which way the market goes, and have a greater opportunity to make money when you have volatile markets. And we are setting ourselves up for volatile markets for the next couple of years. This is the time. This is the time. Simple as that. All right, we got some. We may have some questions if anybody has any questions. By the way, I am not here to give you any kind of financial advice. What I'm here to do is teach you how to use these tools to create strategies that can model your idea of the market and to model what is actually happening in the market today. Very powerful tools. Now, you may wonder, well, what if I'm just a beginner options trader or a beginner trader, period? That's perfect. As a matter of fact, I prefer somebody who hasn't been soiled by all the crap that is put out there in the broker narrative. So I have a way of teaching this that is super simple to understand and quickly pick up and be able to and allow you to jump right into the fire. And we have the benefit also of a ready-made audience of traders in a private room that are there to help you. So really not even an issue because these trades are very easy to put on, very easy to manage. They don't require you to be a day trader or a scalper or anything like that. In fact, you can put these trades on, you make a mistake, no problem, adjust it, fix it, and then sit back. And then you manage them. That's what this is about. This is teaching you how to create a money-making machine when there's lots of volatility. Let's see. Been a while. Hope you're well. Seems chat has well. The chat on my videos varies widely based on whether or not I put any kind of clickbait. If I put a little clickbait, I can get that chat really humming. But that's not what this is about. This is about a serious service that if you take advantage of it right now, what I'm doing is I'm building this service or resurrecting it is a better word, and then applying it so that it again is sort of in line with today's market and also the asymmetric advisory. And so I'm financing it. In order to take the alerts, you need to take the course, the options course. I want to make sure that everybody is successful. So go to asymmetricadvisor.com/cbundle. The course is super cheap. Same course that you would find, actually, I think it's better than at any of these option houses that you'd pay, you know, $500 a module, thousands of dollars. I'm going to charge $225. And I'm also going to let you get into the alerts. These alerts, they're going up in just about maybe about 2 weeks to $97. This is all introductory. We've already got about I don't know 50 people in. I expect to get all the asymmetric people in, so we'll probably have 100 or so by the end of next week, and then that will be it. I'll cut it off and then introduce the new pricing. The course will be the same, but the alerts, they're going to be going up, and you can only get the alerts if you take the course. All right. So go down to asymmetricadvisor.com/cbundle. If you're interested also in becoming an Asymmetric Advisor member, and that would open you up to the monthly reports, the weekly webinars, the trades that we make that we're already in just 3 short months are in double digits on all of them, one of them in triple digits. Then you can go to A bundle instead of C bundle. You can get everything. All right. This pandemic is going to it is creating, and it has created a new, what I said before, a new volatility regime. That it's super difficult to trade with just regular assets, stocks, Forex, Bitcoin, etc. But it is a breeze to trade with options, given that you understand what you're doing with the options. And that's what the course is about. Getting you up to speed very quickly, whether you're a newbie or intermediate or an advanced trader. Getting you up to speed very quickly, and then supplying these alerts where we start talking about these asymmetric trades and start building these strategies to take advantage of the new volatility regime. All right. That's the message for today. I'm going to keep on bringing out this message. I'll probably throw in some thought-provoking discussion tomorrow and the next day. But I needed to tell you that the alerts are only good. This price is only good for the next couple of weeks, probably until, after sometime right after 4th of July. We're going to start this off with the big bang. And then they go up to $97. I think I said $98. 97, 98. I don't know. Doesn't really make it. But they're going up to near $100 a month. Very much worth it. Like I said, I was charging $3.95 a month for these way back when, and people were paying for them. No problem. Stayed with me for years. So same basic type of service, a lot less expensive. The reason why I can do this, as I've told you before, I am the chief investment officer of a family fund with a 9-figure portfolio. I try these strategies out, I make them work, take that research and everything, and then apply it to a private service. I don't compromise the fund at all. It is simply kind of a side thing. So you get to benefit. All right, there you go. Thank you very much. We're going to bring it to an end here. And again, go to asymmetricadvisor.com/cbundle. If you haven't already done it. Like I said, in a couple of weeks, I'm cutting that off at $29.50 price for the alerts. And then it's going up to $97. You need to take the course. Even if you don't take these alerts, this course would be unbelievably worth the money. You'll be able to apply this to virtually any market, anytime. So that's it. Thank you. Take care. See you tomorrow. See you next video.